And welcome to another edition of the VSA Capital Tech and Transitional Energy podcast. It must be a Thursday because we always record it on a Thursday. It's actually Thursday, 16th of September. It's myself, Andrew Hunt, Chief Executive of VSA Capital, and Phil Smith, our Head of Technology and Transitional Energy. Phil, how are you doing?
Hello there, Andrew. I'm very well, thank you very much. And looking forward to the dentist later on, or maybe not.
At 2:30? The old jokes.
The old jokes
are always the best. Come on, let's get cracking on because people don't want to hear boring old jokes from us two old blokes. Nearly said a naughty word then. Right, why don't we kick off? I mean, this week has yet again highlighted the fact that the UK has an absolutely hopeless energy policy. We're seeing gas prices go through the roof. We're seeing this, our interconnect with France has gone down. We're having to restart old coal-fired power stations to create enough energy for the UK. Prices are peaking at incredible highs. I mean, like 6 to 10 times higher than the normal rate at peak hours. First of all, Phil, where's it all gone wrong? And of course, we do know some of the solutions. But what are your thoughts? I mean, it's chaos at the moment out there, isn't it?
Yeah, it is. Well, firstly, there are circumstances beyond our control, and part of that has been gas supplies from supply concerns over Russia, competition for liquid natural LNG, liquefied gas that comes in, that's competition with Asia for demand, and then there's low storage. So that's affecting Europe. But what's compounding it for us is that we took a real lead in reducing our reliance on coal-fired power stations, and were amongst the first to close a large amount of coal-fired power generation capacity, and we were relying on gas. And if you look at this week in the weather, there's been very low wind generation, and if you go on sites like GridWatch, UK GridWatch, you'll see that 45% of our generation is coming from gas, of which there is this current shortage of supply.
I mean, look, we're obviously trying to move over to an SWB energy policy, solar wind batteries. It's the battery bit that is obviously, I think, going to be the issue, and we've discussed that on many occasions in this podcast, and we all know the solution. Well, we all like to think we know the solution. It's only part of the solution, actually. I mean, there's plenty of ways of actually storing energy. I mean, the most common, of course, is hydroelectric, but you sort of need a big mountain to do that, ideally. But there are things like compressed air, which can also work, but they give different durations and that sort of thing. And obviously, we like vanadium flow batteries because they're safe. And we're hearing, I think we just heard again, another set of lithium-ion batteries blew up in California, I think, this week, didn't they?
Yeah, I think there was a fire reported there. Yeah.
I mean, all these lithium-ion batteries are just, exploding into flames everywhere. So, we'll just see, and I think next week, hopefully, we will see the first phase of the Oxford Energy Superhub start up with vanadium flow batteries. And that'll be such a big moment for Invinity because they will be able to say to people, look, there they are working, doing what they said on the tin. But there is a huge crisis in UK energy, and sort of within that, there's a bit of I don't really call it a crisis or whatever, but the Elliott advisors are stirring the pot up at SSE, which is one of our big energy companies. What are your views there, Phil?
Well, SSE, 4100 quoted. You've identified within SSE the lead it's taking in terms of putting in renewable energy capacity, and not necessarily getting that recognised in its in the valuation of the business. SSE also runs gas-fired plants as well to supply electricity, gas to businesses. But what happened here is that a hedge fund, Elliott Management, have come in and are putting pressure on, I think, to spin off the renewable part of the business to split the business up. Now, Elliott Advisors are very well known in the city as a hedge fund, and they campaigned, I think, I was reading with Premier Inn, the owner of Whitbread, to split off Costa Coffee, and that was sold on to Coca-Cola. So, this is something that hedge funds do, and they've been identifying value in SSE, which you've been doing.
Well, correct. We've talked about it a lot. I mean, the interesting thing to me is that sometimes what these companies do, they say, look, we don't want to do what you want to do, but then you've got to do something. So, SSE could go out and try and buy things, shall we say, rather than splitting up. Or, of course, I've always said that someone like Shell should just buy them. I think we are going to see more interesting action there, which can only be good for shareholders. Well, I hope so, because I've always made clear I am a shareholder in my pension fund.
Well, you've done well. The shares are up 37% year to date.
It's been a rocky ride. I've done all right. I'm fairly well in the money, but actually I've got better investments. So there we go. Anyway, we'll watch this space for more activity on SSE. I mean, the other one actually that's been quietly ticking up, which I think, again, we mentioned about a month ago on this podcast, is Centrica. But obviously with the way the gas prices is going, it's quite interesting for them and this whole utility area. Anyway, that's moving perhaps a little bit off piste. Now, you've probably got a whole load of results you'd like to talk through, have you?
Oh, yeah, I have actually. So I'll just scan down my little report I put together to look at those. So sticking with transitional energy, we had full year results from ITM Power this week, and the shares of these shares in ITM peaked at just over £7 in January, and they've been trading sort of £4 ever since. The company has a was it 2 billion market cap, but it's a very large valuation. What do ITM do? It's electrolyzers using that converts water to generate hydrogen gas. And ITM been developing its technology over the years, and they've just posted full year revenues of £4 million. And as I say, I think you've probably got it on screen, Andrew, in front of you, but I think the market cap on this is about 2 billion. So you ask, why is that valuation so high? Well, of course, it's a hydrogen economy, and electrolyzer technology, and a few companies that do this, only a handful, is going to be a critical component of that.
2.25 billion is the answer. It's a pretty high valuation for the sort of business it's doing today, but of course people are speculating that in the future this could be a massive industry, which I think it could be a massive industry, by the way. I don't think there's any doubt about that, because if we're going to move to a hydrogen economy, to create green hydrogen, you basically need a bloody great electrolyzers. But you also do, and again, I think we said this on this podcast before, it's all very well saying, yep, I'll put my huge electrolyzer and connect it into this huge solar farm or this huge wind farm, because that's what you need, that's renewable energy to create the green hydrogen. But when the sun's not shining or the wind isn't blowing, it doesn't work. It comes back to energy storage again. So actually ITM needs long-term energy storage solutions. People sort of forget this. Comes back to Invinity again. I'm sorry to mention it. I'm sorry. I'll shut up. We say it too often. But yep, ITM results. I mean, the stock did come off a bit, and it's still off a bit since the results. I think people are just realizing that there's quite a long way to go yet before this company has got revenue and profits that actually justify a 2.25 billion market cap.
Right. Let's move on to something that's a 5.5 billion market cap, IPO this year. That's Darktrace. The ticker on that is DARK. This is a cyber security software company, and just the sort of thing that we need to see, quoted on the stock market, and good to see the IPO of that one. They've got 5,500 customers worldwide that they protect with their software, and this is their first, so it's their maiden full year results, Andrew. I don't know if you got to see that. But they're reporting their revenues up for their first year, up 41% to $280 million. It's software, so very high gross margins there. You're not manufacturing anything, and 90% gross margins that they're generating. an EBIT. They made a net loss of about 149 million on a turnover of 280. You might think, oh, crikey, that is very large, but within there was an exceptional, and it's a non-cash financing charge of 107 million due to convertible loan notes. I'm not going into what that is, but they had an EBITDA that generated the first EBITDA profit. No, it wasn't. It was an EBITDA profit of nearly $30 million on a turnover of $280 million. Last year it was $9 million. So quite a leap in organic growth there, and they upped their expectations as well going into full year 2022. So that's good news, and expecting their margins to increase. So all looks very good actually.
Well, I mean, the share price since IPO has been stunning. Here we are, just over £8. Back in May, £3, which is great, as you say. It's a company. When it did IPO, we did say it was going to be a successful IPO, and it surely it has. You could argue it was perhaps floated a bit too cheaply, but actually that's not such a bad thing either, because let the new investors have a bit of profit as well. It's always healthy as a company to do that. You don't want to try and squeeze the pips too much at IPO. So yeah, well done, Darktrace. I think, as you say, it's a great British company, done very well.
Yeah, and we want to see more of that in the markets. And I think that I remember at the time, Andrew, and we discussed it, there were some concerns over the valuations of IPOs that had been done ahead of it, and that Darktrace were doing their utmost to get the price right to make for a successful IPO, and they've clearly done that. And another company that's
I'll tell you, I'm just reading. It's quite funny. There's a comment here up on my screens from some news commentators. It says, Darktrace's astonishing rise makes city forecasters look sillier than usual. The news channels that we get nowadays, surely we don't look sillier than usual. We never look silly. Anyway, you were about to say, I'm sorry, I interrupted you.
I don't want to say about forecasts and analyst forecasts, but anyway, there we go. Okay,
well, I think we got it right anyway, so we were bullish on it.
We were, and rightly so. Okay, the Hut Group, or THG as it's now known, and the ticker is THG, and this is a e-commerce company that IPO'd in the last 12 months. 7.4 billion market cap now. Share price 607p this morning, and IPO'd at 500p. The Hut Group have their own brands, beauty brands. They also have nutritional brands that they own, wholly owned. Third-party brands. This is a global e-commerce company, but it's UK based, and they have their own proprietary technology platform as well that runs all their e-commerce sales. So it's selling internationally, and they had their, I think it was interim results this morning. I don't know if you got a chance to look at those, Andrew. And it's, when we look across the Hut Group, they were reporting very high double-digit growth. So sales up 56%, half on half, and they had gross margins of 46.5% in there, and their EBITDA profits were up. So everything was moving for the Hut Group very much in the right direction. But they're also.
I did look at them actually, Phil.
Go on.
Actually, the majority of the growth was coming out of the UK, which I found interesting. Now, either that's telling you that the UK economy is perhaps very, very strong, or it's telling you that they're not as strong internationally as perhaps they would like to think they are. I don't know. I looked at it very briefly, but I did notice that. I don't know if you did.
Yes, I did. And they are. Yeah, I did. And going through the geographical exposures, they are increasing sales in the US. They are investing for more expansion into Asia, which I thought was very interesting. They're also investing very heavily in fulfillment. I mean, they've got plans to invest in 3.6 million square feet of fulfillment. So I think we'll see an increasing amount of sales beyond the UK. But yeah, that was a good spot there in their results.
I mean, one of the reasons certainly we look at it other than the fact it's a very successful company, is that our corporate client Samarkand is often talked about as the mini Hut Group. I mean, it's probably the wrong phraseology, but that's what people call it. Obviously, their speciality is to do brands into China. And you were talking about sort of fulfillment. Their fulfillment skill is they've got SF Express as a shareholder, is a really good partner to be in bed with for fulfillment into China. And that's a real tick in the box that Samarkand have got, that actually the Hut Group, or THG as they call themselves, haven't got. I think they've been a bit quiet, Samarkand, since the IPO. But I'm sort of think that during the autumn there could be some quite interesting news stories coming out that will actually get this stock moving up another level again, because they deserve to. I think they also just have they're talking at Proactive tonight as well, so maybe that'll give them a bit of a blip up.
Yeah, we look forward to that. I mean, they're exposed to such a high growth space, and for Samarkand specifically, it's the world's largest e-commerce market, and they really do specialize in it, and they've got the technology platform to support that. And it's these technology platforms in e-commerce that really are of value. And if you look at the work we did on Samarkand, our valuation is very much on the brands that are flowing across that platform. You get the more or less the platform comes in for free, but they're of real high intrinsic value. And SoftBank indeed have invested in the Hut Group for a share of their platform, and they there's over $1 billion raised for that. So it's a super space, this.
It is, and I mean, there's quite a lot of change going on in China at the moment, which I think perhaps is worrying a few people. I don't think they should be worried, because actually all the sort of change that's going on won't affect Samarkand, I don't think. The sort of products that they're selling in there are pretty low ticket. They're for the average person, should we say. The sort of changes to some of the technology groups and payment groups that are being forced through at the moment, again, shouldn't affect them, because they're tied up with a lot of different players. So, if that is worrying people, then it shouldn't do, in my view. But one has to be aware of it.
Yeah, absolutely.
Okay, what other results have you got?
Oh, okay. I saw results from TinyBuild. This is a good sector for the UK quoted market. TinyBuild, the ticker is TBLD, market cap's £535 million. It IPO'd in March 2021 at a market cap of £340 million, and it's a video games publisher. And you look across the quoted market, and we've got a number of really good listed video games publishers. Obviously, the environment for video games, as anyone's got teenagers will know, during COVID and lockdowns, has been very good, with computer games being enthusiastically played. So TinyBuild has published interim results to June 2021. So this is a six month period. And TinyBuild's based in the US, actually, which I didn't know. And they've reported what we've got in here. So the revenues were flat in dollar terms at about 18.6 million, which kind of surprised me. But their profits have been increasing, which is something you really focus on. And they saw their EBITDA, margins increased to 42%, and their EBITDA profits were up 18%. So a high increase in underlying profitability. But I think in terms of driving the revenue growth, they have announced launches of new titles, which is what the games players need to do. But this trading on EV revenue multiple of 13 times, EV EBITDA of 33 times. You can see the value the games publishers command, and that's because you acquire these things, you're getting not just a client base, but you've got a franchise of games that you can add to your portfolio. But so interesting to see results from that one, and a good sector for investors to be looking at.
Interesting. Yeah, I didn't spot that. I must admit myself. So well done, Phil.
Well, it's my pleasure. Another one that had results as well is Eleco, or I don't know how you pronounce it. It's ELECO is the company name. The ticket is ELCO. 100 million market cap, Eleco, and they had interims to June. So there's a lot of results coming out at the moment for investors to look at, interim period results. The company trades on EV/EBITDA of 4.3 times, No, EV revenue 4.3 times, EV EBITDA 20 times. Now, this is a pure play software company, and as such will be generating higher margins and hence the higher multiples. And that software is used, and I've met the company before actually, it's a very interesting one. It's used by architects and construction companies for project management in construction. But also their software provides computer-aided design and visualization. The visualization software is like if you want to know what the interiors of buildings are going to look like using different materials or different colors, you use this sort of software to do it. So they get interim results, and their revenues were up 13% to £13.8 million. Their recurring revenues increasing by 8% to 7.5 million out of that 13.8. So that's two elements there. Recurring revenues up, that's all positive. But the fact they saw revenue growth, I thought was really interesting because end of the day, this is construction related buying, and during COVID, I'd have thought the construction sector would have probably slowed down a bit. I mean, certainly in terms of boots on the ground. But this is software provision for the design, so I thought they did quite well in the in the environment. And the revenue growth of 30% dropped through to operating profit of 14%. So they're being able to hold their margins and control their costs. And I thought that was quite a good set of results from Elico there.
Yeah, I think the market unfortunately was quite in your camp, Phil. It's been hit quite hard, off 6% or so today, but it's come down from 145 to about 120. Not too bad a hit, but bit of a. I think the market expectations were quite high for this one.
Well, that will be the reason why, because it was a decent set of underlying, given the environment, I think, and the environment that's recovering, a reasonable set of numbers. But yeah, well, that comes down to forecasting.
Any other figures, or should we move on to a few other things before we've run out of time?
Let's move on to.
I don't know if you've been following. I'm just somewhat intrigued, and I'll be honest with you, I haven't really followed enough, but I'm intrigued by this Ecotricity bid for good energy. Have you followed that at all?
No, I haven't, Andrew. So you update me on that.
We may talk about this next week because it's a hostile bid, and hostile bids are always quite fun because each side sort of slags each other off. So I need to get behind it. But I just mentioned that anybody's got any views, do direct message me. The winners of hostile bids tend to be the advisors, nobody else, dare I say it. I also I noticed somebody I was talking again today, 6 months ago, every fund manager and his dog was talking about how they loved Myriad advertising. I noticed that since 6 months ago, the stock has halved. When fund managers are all going out on video blogs saying it's their favorite holding, that actually where there's a tip, there's a tap, and they're all trying to get out of it. And they clearly were. But actually, it's still just think about it, billboard advertising is obviously not easy at the moment. It's got a relationship with Tencent, which probably has put it under a bit of pressure at the moment. But actually, everyone's gone quiet about it now. So maybe now's the time to be looking at it again. I've always been slightly skeptical about it, certainly when it was up at 60p, but down at 30p, everyone's gone quiet. Maybe it's time to look at it. Anyway, just marking a card there. One I've got to do some more homework on again as well. Now, you took one result which I looked at, which at times was a slightly bigger story as well. There's a small company out there called Perez Investments that it's been around for ages and had various different management. It was a sort of AIM investing company, and it was going nowhere for a long time, but it's actually recently focused itself quite a lot. And its sort of biggest holding is in Shore Valley Ventures, which is basically an early stage VC fund. And so Perez Investments acts as a sort of LP to Shore Valley Ventures. It's not quite as clean as that. What's interesting though is we're obviously doing a lot of work for Super Seed, which is an early stage venture capital fund, and we're looking at whether we can find some sort of quoted vehicle to help fund it, because it's very difficult for investors. I'm talking here retail investors and institutions to get involved at the very early stage that these people are. Where look, some companies may fail, but you're going to get some that will go up, not 10 baggers, but will be 100 baggers. So, and if you've got the right expertise running these funds, the returns can be huge. So I note that one. Actually, the market again hasn't taken it very well. The stock's come off since the figures, but I mean, you know, actually their NAV was up like 80% or something. And those are the sort of, you know, at the interim stage, those are the sort of returns you can be getting. And, you know, actually, I had in today a company, fascinating company that's into basically AI-powered SaaS solutions, which is what everybody sort of wants to get involved in. And these guys, it's pretty early stage, but they seem to be working with all the financial institutions to basically help manage their data, and particularly things like, you know, the amounts of email that we get that can be so time consuming, you know, everything that's coming in, there's so much flow of information. So there's a lot of things going on with artificial intelligence, SaaS, early stage. We're looking at a lot of things, trying to work out how to play it, how to get people involved. Again, anybody out there listening to this who's got any views, wants to call me then or direct message me, feel free, because we're really looking into this space to try and put something together, because I think there's an awful lot of growth and an awful lot of returns that can be achieved from it.
Absolutely, Andrew. And as an investment bank, it's just the sort of areas. These are the sort of areas that we should be supporting. And you know, you look at the activity and the scale of activity in the States in terms of supporting early stage companies and getting investment for early stage companies. You know, we welcome the you know, the opportunity to offer our clients the chance to get in at that earlier stage.
Yeah, another thing I spotted this week actually was that Ilika have got themselves a proper OTC quote in America to try and get American investment. I don't know if you saw that.
Yes, I did.
I'm never quite sure whether an OTC quote really works in America or not. I've done a bit of work looking at it myself as well. You know, most people say, no, you need a full NASDAQ listing, but that, you know, that takes 6 months and $5 million or something. OTC quote you can get quite easily and cheaply. I'm not sure it really does enough. I mean, I think it's okay if you're a retail investor and it just allows you to own it in America, but I'm not sure if it really brings in the American institutions. I'll be very interested to see whether Ilika now gets a bigger US following, having got its OTC quote. So I'm sort of watching that quite closely as well.
Yeah. No, right, and rightly so, because you know, the tech space. What happens in the States is certainly different, and the valuation metrics are very different as well. So it will be interesting to see how that all goes.
And valuation metrics, put another naught on the end. Anyway, there we go. I finally, actually, it's probably worth mentioning, we had the ITF, which is an intention to float from Oxford Nanopore today, which obviously is you know, the proxy for it at the moment is IP Group. So that's good for IP Group. They're moving it on. Great that Oxford Nanopore is coming to the UK market.
Yeah, so that's super news. And we also saw you know, an announcement that ex-Scientia, which Frontier IP Group, we do research. You know, we act for and research for. It's one of their holdings. Ex-Scientia is also looking to list, and that's in the States. And that's healthcare AI, and they're backed by major pharma companies that have had large-scale investment, including investment in from owned SoftBank. So that'll be exciting to watch.
As usual, Phil, there's a lot going on. We've just talked for 30 minutes. We really must stick to 30 minutes, otherwise our listeners will just switch off, because you know, that's what happens. So we'll call it a day there. As usual, if anybody's got any things they want us to talk about, please let us know. If you've got any comments on our debate here, please let us know. And I hope you enjoy listening to it, and we'll speak to you all next week. Thanks.
We will do.